And we had a alarming historic milestone where the public U.S. debt crossed $33 trillion. And just yesterday, they added more than half of Bitcoin's market cap in one day to the debt. And so, Preston, right now the bond market seems to be on fire, so to speak. Yields are rising. I've heard you talk about the bond market so many times of how, hey, this is the value that's eventually going to end up in assets like Bitcoin. Look at this giant mountain of debt. And so right now yields seem to be spiking. There's a lot of narratives around this debt crisis. How are you seeing things right now in terms of the bond market?
I think most are familiar with just the bond market in general, and they're looking at these yield curves, and they're seeing the yields go higher, which means the bond prices just keep going lower. And if I could rewind back to the Silicon Valley Bank situation that happened earlier in this year, the response that the Fed had was effectively yield curve control, but it was only yield curve control for the banks. If they actually wanted the deep recessionary, deflationary forces that were brewing through that event to occur, which would have brought the recession/depression if they continued to keep their hands off of the controls and not done anything, they would have taken whatever inflation was at that moment and it would have been deflated completely out of the economy really fast, because that's how the fractional reserve system works. So they didn't want that to happen. They want everybody else to experience the inflation, to deal with all that so that they can not just have the banks fall apart and collapse, but for everybody's buying power to contract so that they can try to keep their hands on the controls and in some semblance of the controls from 7, 8, 9% inflation of what we are dealing with. So what I think you're going to continue to see in the market, going to your question, is you're going to continue to see them use surgical tools like the backstop facility that they use, which is effective yield curve control, but only for the banks.
Yeah.
They're going to be much more surgical. I'm curious how Hoffa sees it, but I think they're just going to continue to be more surgical in the way that they implement things, whereas before it was just QE for everybody. We can't manufacture inflation whatsoever. And they did that for a decade plus until now we're at a much different situation post-COVID, where all these effects are now really kind of manifesting themselves in a very systemic kind of way into the economy.